You were listening to chartingwealth.com for Friday the 30th of September 2016. The market is down for the day. Did we tell you we saw this coming? Of course we did. Why? Well, we're currently in a down move on both the 2-week chart and the 2-day chart. And we had a candle, the first day of the 2-day candle, that was up over the course of the prior day on Wednesday, but Thursday, big down day. Total market down 0.84%. That trimmed that up candle down to nothing but a spinning top, and a small spinning top at that. Derivative oscillator is still losing some speed. However, the MACD and the signal line have continued to move down on the 2-day chart. That portends further movement down. Now let's look intraday and see what we see going on. And of course, we've had a crossover back going down in the afternoon. Were you waiting for that? Did you jump in? We had an up morning on Thursday and then a down afternoon with a crossover going back down. Remember how when we crossed over, and we mentioned this over the course of the review yesterday, that at 4 p.m. on Wednesday, the market actually flipped over going up. However, the derivative oscillator stayed negative in both the evening and the following morning and afternoon. It never flipped over, although the MACD did. Well, the market was short-lived in that up move and flipped over with a down day on Thursday. So you had an entry point Thursday afternoon. Now, we'll continue to move through the indexes because I want to look at the S&P 500 next. Of course, that first IYY is the total market. The SPY is the Standard & Poor 500. What is it doing? Well, it's been in a confirmed down move on the 2-day chart since way back on the 24th of August, and slid sideways for a while, dropped in mid-September, popped up over the course of 2 candles back on the 21st and the 23rd, those two-day candles, and has stayed in the negative. Now, if we look, and we have more like a doji instead of a spinning top. Market closed below the weekly trend line, and hopefully in the near future we'll be able to redraw a good 2-day line. We don't have one at this point. If we look at the 4-hour chart, what do we see? Well, still in a confirmed up move. We don't have a crossover going down yet. Those of you who do like to use your Hinkin-Ashi candlesticks, you may have tried to jump in the afternoon. Not as safe as waiting for a crossover going down. That hasn't happened yet. Derivative oscillator still in the positive, and the MACD still in the positive. Don't have a confirmed jumping in point on a down move yet for SPY. Okay, we're going to go back to the 2-day chart, and we're going to take a look at the Qs. Oh, for the record, S&P 500 down 0.90% for the day, almost a full 1% down. The Qs, QQQ, we call it the Qs, people call it the cubes. What is it? It's the NASDAQ 100, currently in an up move on the weekly chart, down move. We cross over going down on the 2-day chart. That happened back on the 26th of August. And again, it really slid sideways, dropped 4 days, the 9th through the 13th. And then starting on the 15th, going up. A little bit of indecision on the 2-day candle that ended on the 27th of September. And over the course of the day, down 0.73%. We have another spinning top indecision, closed above the Bollinger Bands. We can see how the Bollinger Bands have tightened up. Bollinger Bands are volatility bands. You want some training on what Bollinger Bands are. I don't know if you call them Bollinger, whatever. They are volatility bands. We've got a good training at the website. Encourage you to listen to. You can also find that one at YouTube, at our Charting Wealth YouTube channel. Bollinger Bands, basically volatility. When they get tighter, it's showing you that volatility is decreasing, the market slipping sideways, moving within a range, which is what it has been doing over the last 4 days. Still in the negative on the derivative oscillator. MACD is in the negative on the 2-day chart. Let's take a look at what's going on the 4-hour chart. And you had a jumping in spot right after lunch. We had a nice big down candle, actually a lot more down movement that was retraced. We have a huge down wick. We also have a little bit of an up wick on the candle for the last 4 hours of the day. But again, told you to be careful about a crossover going down. That did occur. Want to hear from you how many of you jumped in and what you've been able to do on that ride so far. We'll see how long that down move occurs. Again, the caution we give you with the cues is that yes, we are in a confirmed down move on the 2-day chart. The problem is that, of course, our weekly chart on the cues is still in a confirmed up move. So be careful there. Remember, all things being equal, the market tends to move in the direction of the biggest chart, and that's the weekly chart. So a little bit of trepidation there for the cues. Lastly, we're going to go to gold. Gold was down 0.12% for the day. I'm going to need to redraw our trend line a little bit. And gold's in a confirmed down move on the 2-day chart, has been all the way back to the 8th of August when it rotated over going down. Gold's popped up a couple of times, currently in a confirmed down move. What's interesting about gold is even though it's in a confirmed down move on the MACD, we have 3 2-day candlesticks worth of up movement on the derivative oscillator. Just a curious little thing there. Probably meaning that isn't going to stick around too long. Actually lost some energy today, but that's a curious oddity. Now, pay attention. Maybe that's going to tell us something in the future. What's happening on the 4-hour chart? That 4-hour chart's working for us like gold, isn't it, my friends? 28th rotated over, going down below the 2-day trend line, and continuing to move down. Your buy-in point, of course, was sometime in the morning, back on the 28th. We talked about that. So again, if you want to master these charts, study with us every day. Did you see what we put up yesterday? We put up a great training on how to use our daily market worksheet. Please go to both the website, chartingwealth.com, under training, and you can also go to Charting Wealth's YouTube page, and you can review how we use that wonderful worksheet. You can print those out, use them every day. As you listen to this broadcast, fill that worksheet out. Spend a couple minutes after the broadcast is over just digesting what it is you've written down there. Do it every day. You will turbocharge the development of your training and ability to read charts by using that worksheet. And you're already listening to the broadcast anyway. Fill it out as you go. Thank you so much, my friends. It's great to hear from you. Let us know. We've already been getting a lot of compliments on that training. Please do take it. It is, again, how to use the daily market worksheet. We appreciate you. If you want to help us out, go to iTunes, subscribe to our podcast, give us a 5-star rating. Keep keeping us up in the top 10 in the world of stock market training. And also go to our YouTube channel. Guess where we release that training first? YouTube. To our subscribers, subscribe to the YouTube channel. You'll get our proprietary training first, and of course, for free. Thanks so much, my friends. Appreciate you. Let us hear from you. God bless from chartingwealth.com.